top to highlight is the fact that, this listing that we're seeing today, very different from a traditional IPO. You're listing by way of introduction and you're not offloading shares to the market. So take us through that rationale once again.
The rationale is actually quite simple. We have a much longer term strategy in terms of how to raise capital. In the short to medium term, the company has really met its obligations in terms of what it requires to fund its growth. So from that perspective, we really wanted to come to the market when the company was still in a position where it had a strong growth trajectory to offer investors an exciting growth stock.
Let's take a look at how you're actually getting this growth and investments that are being made, because focus to a large extent has been within the infrastructure sector. Do you see the scales tipping at all, or is that primarily what's going to be the focus moving forward?
No, the focus will continue to be infrastructure. That's really where historically we've focused and what's really driven a lot of the growth. We believe that we've got a good momentum in the infrastructure space. But that said, it's really still early days. There's a lot of growth still left in our existing portfolio.
With what you're looking to do, what capex spend are we looking at for this year? What kind or size of capital investments are we looking at?
Okay, we've already made about $20 million in the capacity expansion of our cable plants across Africa. We are just about to launch into a $300 million capex spend for the railways, of Kenya and Uganda railways. So those are the types of figures that we are looking at.
And how exactly is this being funded? Is it coming completely off your balance sheet? Are we looking at a combination of debt to equity? What exactly is the case in that regard?
In case of the 20 million capex that we've put into the cables, we've been fortunate in that those have been very strong cash flow generative businesses. So that's really been through sort of self-funding. In the case of Rift Valley Railways, we've really done that through convertible bond offering, as well as through a debt package with a lot of the development finance institutions.
Let's take a look at, in terms of where regionally or geographically you're looking to invest right now. You've got a presence already in Kenya, Uganda, Zambia. What kind of regional footprint are you exploring at this stage?
At this stage, we are of course strong in Eastern Africa. We're a Kenyan company, so that's really been where we've naturally been able to develop faster. We've really started now to move towards a more sort of Central and Southern African market, which is why you see us doing some more infill acquisitions in markets such as Zambia, for example. So we'll continue to look to be better represented across East Central and Southern Africa, which is really our, let's call it, Tier 1 focus. But we also have a Tier 2 focus, which is really to expand towards West Africa. A market that we're really keenly looking towards currently is Nigeria, for example.
The assumption has been that, for investors who saw the last IPO in 2008 when Cooperative Bank listed, they're going to welcome this one. If you have to sell TransCentury's investment case right now, what's the investment merit that TransCentury holds?
The investment merit is really based around the fundamentals of the business. And that is, today, across all of the markets in which we're operating, there's a huge infrastructure deficit and a huge demand for infrastructure. And this is in key infrastructure assets, in particular power infrastructure and transport infrastructure. So the real value proposition for an investor in TransCentury is it really gives you an avenue to sort of tap into and monetize the opportunity as that gap over time starts to get closed in terms of infrastructure provision across the region.